My name is Andrew MacDonald. I'm a Senior Analyst on the Jane's Defence Industry and Budgets team, and it's my pleasure to welcome you to this online intelligence briefing, which will present our Global Defence Budget's Annual Report for 2017. The Jane's Intelligence Briefing Programme consisted of around 40 events in 2017, and it will continue to deliver these briefings to all of our customers throughout 2018. Today, myself and my colleagues Fenella McGurty, Guy Eastman and Craig Caffrey will present a session examining the key developments in global defence expenditure in 2017.
So without further ado, looking at the key trends that we've seen in 2017, global defence spending increased for a fourth consecutive year, but we're still expecting total spending to remain below its 2010 peak. In North America, we saw increases in shipbuilding, missiles and munitions, while aircraft systems and missile defence systems decreased. As the oil price stabilized, growth returned to the Middle East, but at a more moderated rate than in previous years. Growth stalled in Asia Pacific, but foundations for growth remain strong going forward. And finally, Latin America and Eastern Europe were the fastest growing regions globally. So looking at that in a different way, global defence spending returned to growth in 2014, following the 3 years of cuts that were implemented in the wake of the global financial crisis. Total global defence spending grew by just under 1.5% in 2017, compared to a fairly lackluster growth in 2015 and 16. So really what we're entering now is a period of higher defence spending growth. That surge that you can see in 2018 is driven by growth both in the US budgets as well as key markets in 2017. I've got some charts here that show budget growth in the top 10 and bottom 10 markets in 2017. The dashed line distinguishes between the top and bottom. Clearly, we have huge double-digit growth in a couple of European markets in order to bring spending up to 2% of GDP and also pay for ambitious procurement programs. Others, like Argentina and Brazil, are really recovering from any ground lost between 2012 and 2016 as inflation is subsiding and some political stability returns. Down at the bottom end, it's clear that high inflation and muted oil prices are still affecting some countries which are struggling to return to growth. Looking at the future trends, what's clear is that there are very few countries globally with a sustained negative outlook. Again, we have the continued prevalence of Eastern Europe and Asia Pacific markets in the top 10 performers going forward. Then you have a handful of countries that are essentially on a stable growth path. Israel, for instance, had a really
There are two countries involved here in North America. One is U.S., the other is Canada. You see the graph there that gives the profile. This is in constant dollars, and it goes from 2011 to 2022. Obviously, you see a decline from over $800 billion through fiscal year 15, and then an increase. The region has a CAGR, 5-year CAGR percent of 1.0%. U.S. is 0.9% and Canada is 3.1%. At $658 billion in 17, fiscal year 17, the region is about 40.8% of the global defense budget. You can see that there is some stabilization in the out years in the forecast from the initial decline. Canada on the top in gray there is actually increasing their budget as they announced in June of 2017, and it's going to increase out through fiscal year 24, rising to about $17.5 billion by fiscal year 22. They have a target of 1.4% defense budget to GDP ratio, and we'll see if they can get there. The forecast I put forth is somewhat less than that. Next chart, please. So that's the look at the region. Just for a comparison's sake, I have the top 10. I always like top 10 charts. So here are the top 10 countries. We do 105 countries in JDB. You can see the size of U.S. and China in relation to the other countries, and then of course you see the trend that decreases throughout the rest. All the countries maintained their position from last year. Where the defense budgets are as we saw, have a positive CAGR in both cases. The globe, the largest investment budget is in North America, as Fenella had mentioned. And in number 4 bullet there, you can see that ballistic missile defense, based upon the geopolitical situation, is receiving a lot of attention. And, of course, the supplemental that came out in November had over $2 billion just for MDA for BMD. Shipbuilding continues to increase. Obviously, the Navy needs more ships, whereas aircraft is on a slight decline in fiscal year 18, although it's still large. Readiness is a big issue with O&M, and the Joint Chiefs maintain that they're some years away from a full spectrum readiness position. The troop strength is increasing with this budget, so that's good, mainly for the land forces. And lastly, the Canada Defense Plan of June, as I mentioned before, they're targeting 1.4% of GDP by fiscal year 24, and we'll see how that turns out.
So 2017 has been a year of marked turnaround for Latin American defense budgets. Economic crisis first began to slow the growth of defense spending in the region in 2013, with contraction eventually hitting in 2015 and 2016. Large rises occurred in defense budgets this year, however, with new administrations in Brazil and in Argentina responsible for the greatest increase. Although very significant, this return to growth is likely to be dependent on the success of policy reforms in reviving economic growth. Brazil remains by far the most significant market in the region, spending almost $29 billion this year, which accounts for just under 50% of the region's total. With Brazilian spending now restored almost to its real peak in 2010 and economic recovery expected to be tentative, regional spending growth is forecast to be far lower in the years to 2021. So if we move on to the next slide, we can see that 2017 has been far more positive for most countries in Latin America than the preceding years since 2010, with the majority of countries' budgets growing in real terms. In comparison, in 2016, all but 3 countries in the region cut their budgets, and spending in the region fell by over 6% in total. This year, total regional growth was 7.6%.
So we're going to start with a very quick run-through of Russia and CIS, mainly because trends here also have implications for NATO and Europe in particular. I think what's immediately apparent here in the left-hand chart is that really when you talk about this region, obviously the overall trends are almost entirely dictated by Russia. Spending has fallen by around 16% over the last 2 years, and that's largely due to decisions that have been made in Moscow. But you can also see on the right there that trends have actually generally been negative region-wide. There was a large increase in Azerbaijan in 2017, but that is really just a recovery following earlier cuts to procurement spending. Rapid growth that we saw between 2011 and 2015 has come to an end, and that the pace of modernization is slightly being scaled back as a result of those cuts. So let's move on to 2 of the key regional defense markets, starting with the Middle East. As we know, the collapse of oil prices in 2014 put an end to the rapid growth that we'd seen there in the Middle East. Growth fell from an average of 7% between 2012 and 2014 to just 1% over the last 3 years. Spending actually fell in 2016. So with that in mind, really the positive news for defense suppliers would be that growth did return in 2017, and spending actually managed to reach a record high of $172 billion. But with energy prices still low, the process of fiscal consolidation is ongoing, especially in the Gulf states, and that will continue to restrain growth going forward. Security concerns throughout the region mean that...
Looking again quickly at our key regional trends, we can see what we're expecting to happen in the next 5 years. So we're looking at slow but steady growth in the largest investment spend in North America, recovery from a collapse in investment in Latin America, the fastest overall growth occurring in Eastern Europe, solidifying improvements in Western Europe, constrained growth in the larger markets of sub-Saharan Africa, slow recovery of oil prices enabling improvements in the Middle East, and the maintenance of downward pressure on Russian spending. And finally, the continuation of budget expansion in what we consider one of the most important emerging markets, Asia Pacific. We're likely to see that global spending will surpass its previous peak of 2010 and reach $1.7 trillion. Expansion is forecast to be 3.3%, the fastest rate we've seen for a decade. As I mentioned, Eastern Europe will experience the swiftest growth next year, a great deal of it in investment spending. We're expecting 8 NATO members to reach their 2% of GDP guideline, the highest number since before the financial crisis. And once again, Asia-Pacific growth will accelerate. Finally, we look forward to welcoming you to our future online briefings. Our next session on Wednesday, the 13th of December, is the Jane's Defence Weekly Annual Defence Review. so hopefully we might see some of you there. Thank you again, and goodbye.